Alright guys, it's your boy Shades and Trades here with another video. Let's talk about Tesla stock. Alright guys, Tesla stock is at the end of a wedge. If we switch to the monthly chart here, you'll notice the pattern that it is in is a descending wedge. A descending wedge, for those of you who don't know, indicates a breakout to the upside once it gets towards the end of the downward wedge here, because selling pressure dies off towards the end of it and we get a huge explosion to the upside. That's the monthly chart. If we go to the weekly, you'll notice it's inside a wedge. And then if we go to, yeah, it's kind of funny how that works. If we go to the lower time frames on the daily, you see a much more clean wedge, and the price action is looking like we are getting ready to explode to the upside, which means we could see as, yeah, we could go as high as 186 to 190. So I'm looking at calls. If this breaks out of this wedge, look to buy calls, hold them for 180 to 190, and just sit on those calls. But make sure to buy them. Yeah, don't buy short-term dated calls. Buy long-term dated calls. Definitely want to sit on them for a couple of days if this is going to run up to 190. And let's switch to the lower time frame. The lowest time frame I like to look at is the 1 hour. You can see it's just going sideways here. And technically, we could probably buy bottom on this. The bottom on this is 174. It always comes down there for some reason. It's getting ready to break out. Watch for a breakout above 177. If it breaks out above 177, buy your calls. If it breaks down below 174, then you're going to play the put side, but I don't recommend shorting it. It's looking like it wants to break out of this wedge. So that is what I am watching for here. And that's it for the video. Short, sweet, and to the point. There's not much else to talk about. We're making a play here on the technicals. So keep an eye on this one today. No, not today. Tomorrow, and see where it breaks out or breaks down to. And from there, play your calls or puts. But it's looking more bullish than bearish here, because usually, again, towards the end of a descending wedge, the selling pressure just completely dies off and buyers take control and push it up. So that's why I'm saying go with long-term dated calls. But be ready. Definitely have a stop loss though. Don't just buy blindly. Have a game plan. That is it for the video, guys. Don't forget to like and subscribe. I will see you guys in the next one.